Stop ignoring Tesla's robotaxi risk. Seriously. If you think Tesla's autonomous future is unstoppable, you haven't been reading the New Jersey state legislature. Here is the counterintuitive truth that every Tesla investor needs to understand. New Jersey is advancing a bill that would effectively ban Tesla's camera-only robotaxis. Not Waymo, not Zoox, Tesla. The bill would require driverless commercial vehicles to use cameras plus 2 additional sensor types, effectively mandating radar and lidar. Tesla's camera-only approach would be locked out of America's most densely populated state. But here's the twist. Tesla gained market share in China last month, up from 5% to 5.3%. 2 stories, 1 stock, mixed signals. Let me break down both. I'll admit something. I saw Tesla stock up 3.6% on the week and thought, good news. Then I read the New Jersey bill, and I realized, the robotaxi bull case just hit a major roadblock. Today, I'm going to break down both sides of Tesla's week. By the end, you will understand why Tesla is winning one battle and losing another. Let's start with the bad news. The bill, New Jersey Senate Bill S-1677. The requirement, autonomous vehicles must be equipped with cameras plus 2 other sensing technologies, effectively radar and lidar. The second requirement, vehicles must retain traditional steering wheel and pedal controls. The result, Tesla's camera-only Cybercab would be banned. The sponsor, State Senator Andrew Zwicker, a physicist. He says this is not anti-Tesla. He's pro-New Jersey safety. His argument, at this point, he doesn't think the evidence is sufficient that a single sensor with software can handle situations that humans can. The context, New York is considering a nearly identical hardware mandate. The counterintuitive truth, Waymo uses cameras, radar, and lidar. Tesla refuses to add hardware. Now let me explain why this matters. The sensor debate, Waymo, Zoox, and nearly every other autonomous vehicle operator run cameras, radar, and lidar together. Cameras read signs and lane lines but get blinded by glare and heavy rain. Radar cuts through fog. Lidar builds a precise 3D map regardless of what's painted on a wall. Musk's position, adding sensors introduces conflicting data and reduces safety. Humans drive with vision alone. The data problem, a camera-only system drove straight into a fake wall that a lidar-equipped car easily detected. Carnegie Mellon professor Philip Koopman argues camera-only tech simply isn't ready for around-the-clock public road use in tough climates. The gap, Waymo operates over 3,500 driverless vehicles across 11 U.S. metro areas. Tesla still has only a handful of unsupervised test vehicles on public roads. The counterintuitive truth, Tesla's robotaxi expansion is real, but it's incredibly small. Now let me show you the good news. Tesla's China EV market share in June 2026 to 5.3%, up from 5% in May. Ranking, number 5 in China behind BYD, Geely, Leapmotor, and Changan. Retail sales, 52,920 vehicles, down 13.9% year-over-year. NEV exports, Tesla China ranked 4th with 36,171 units exported, up 257.6% year-over-year. The counterintuitive truth, Tesla's China sales are still down year-over-year, but the market share gain is a positive signal. Tesla is stabilizing while the market grows. Now let me talk about the stock. Weekly performance, fractionally higher Friday with a weekly gain of 3.6%. Current price, $411.84. Context, the 52-week high is roughly $489. Why the gain? FSD update momentum from V14 Lite rolling out to 3.5 million HW3 cars. Q2 deliveries beat at 480,126 vehicles, up 25% year-over-year. Robotaxi expansion with the Miami launch. Why the caution? The New Jersey bill threat. China sales still down year-over-year. The stock trades at roughly 380 times earnings. The counterintuitive truth. The market is focusing on AI and FSD momentum, not legal risks. Yet, that could change. Now let me put this in perspective. Tesla's robotaxi footprint, 5 markets live including Austin, Dallas, Houston, SF Bay Area, and Miami. 4 more queued, with only roughly 40 vehicles in Austin. Waymo gives 500,000 paid rides each week. Tesla doesn't disclose ride volumes. The gap is enormous. Let me leave you with the 3 secrets that connect everything we just discussed. Secret 1. The sensor mandate trap. New Jersey's bill is the first state to mandate specific hardware. If it passes, other states might follow. Tesla's camera-only approach could face a patchwork of state bans. Secret 2. The robotaxi scale reality. Waymo has over 3,500 driverless vehicles. Tesla has roughly 40. Waymo gives 500,000 paid rides each week. Tesla doesn't disclose ride volumes. The gap is enormous. Secret 3. The China stabilization signal. Tesla's China sales are still down year over year. But the market share gain suggests stabilization. If China stabilizes and New Jersey bans robotaxis, the stock trades 1 for 1. So what should you actually do with this information? If you own Tesla stock, watch the New Jersey bill. If it passes, other states might follow. Watch FSD China approval in Q3, that's a bigger catalyst. If you are a robotaxi bull, Tesla's expansion is real, but it's slow. 5 markets live, 4 more queued, with only roughly 40 vehicles in Austin. The stock's valuation assumes massive scale. That's not here yet. If you are a trader, the next catalyst is July 22 earnings. If Tesla provides robotaxi revenue data, the stock could move. If not, volatility continues. Here is my question for you. Do you think Tesla's camera-only approach will survive state-level bans, or will regulators force a hardware change? Drop your answer in the comments. I read every single one. Like and subscribe if you want more analysis on Tesla, autonomous driving, and the companies reshaping the industry. I'll see you in the next video.